We will try to discuss what is the best way to provide value to the consumer, to the retail consumer in the lending process. I would like to start with Ms. Elena, representing the merchant, which in turn represents the user, by asking her, what do you look for in provision of services through your shops that allow for consumer lending?
First of all, we analyze the condition that the new provider
Maybe closer.
is better. Okay. We analyze first of all the conditions that the provider have for our and for our clients. At the same time, we see in how many days we receive the cash from the our partner. In general, this part have directly impact in our cash flow. And for this part, it's important to know if we receive the money in the same day, in the T+1 or more. This is the reason that we take into consideration when have a new collaboration with some company. At the same time, we verify the condition that the new partner give our clients. It's important the clients have a good visibility about all the services that can access from our store and from our partners.
So also the reputation of the provider is important to you.
Yes, because if one supplier have a bad experience in our store, he didn't come back next day or in the next period, and we don't want to lose the clients.
Thank you. So going to the three esteemed banking panelists, right, with Ms. Andra Ion starting. Raiffeisen is a universal banking group, also very big and respected in Romania. What is your approach? How do you see with the evolution of these services that the bank is also evolving?
Thank you very much for the question. I was actually listening to the panelists before me, and all of them, irrespective of the industry, they were speaking about change. Also, universal banks are actually changing, and our role is not anymore about product producer, but actually orchestrators for the ecosystem of the financial needs of the customers, which is actually fully built around the needs of the customer. And the answer, so it's nothing new actually, it's not rocket science. It's just the fact that we all know that customers do not think and actually never thought in terms of products. They thought about in terms of life events, buying a house, protecting their families, building or securing wealth. So why should we push products in the end, but rather as a bank, especially as an universal bank with all the fledged financial solutions, we are actually focusing on having the right financial solution, lending included, of course, but very importantly, and things that we actually learned during the last years at the right moment. And again, very important on the right channel or the right point of sale.
And just as a quick follow-up, as an orchestrator, which is putting together the Lego blocks to build the right solution for your customer, what do you build and what do you buy or partner for? How do you decide?
Yeah, actually, we stick to our core responsibilities and core capabilities, which is risk management, funding, trust, which is very important, but also KYC and everything related to bank core activities. But on the other side, we are very keen in looking in partnerships that are actually enabling us to reach different growth markets, ecosystem that can bring additional customer or help us being closer to the customer, closer to the moment of truth when he needs a financial services. So we are very open to partnerships, whatever it means, partner with a fintech, a merchant, retailer, whatever else, because actually the future is not having, so the participant having all the pieces of the puzzle, but owning what they can do best and actually combining the expertise and getting other partners alongside.
So thank you. And you will be, flooded with invitations for meetings now that you said you like partnerships, right? Our next panelist, Vilma from Avarda Bank, will present how your bank, which is a significant bank in terms of assets and balance sheet and coverage of the European countries, especially Nordics, how do you see your role? Because it's quite different, and it's very interesting to see a quite different business model to provide good consumer lending.
Yes, our model is quite different because we are providing the merchant checkout. That's our product. And what we do there is we stay absolutely incognito behind that. That's a deliberate model. We are, let's say, the opposite of the Klarna model. And why we do that is actually that we really, really see the benefit when the merchant owns their customer. Each customer has come to the merchant homepage that already shows the trust to that brand. They don't pick the place where to purchase something because who provides the payments behind there. And by collaborating with the merchants in a different way, while they really own their customer, and that is the only brand throughout the journey, that gives also us as a vendor much stronger benefits, because no merchant will share their data when they know that it goes to the competition. Meanwhile, if they own their checkout, they are willing to share the data, and the data is the value. Only that we are able to actually provide the best possible model for the merchant. So that's why we have chosen that path, and that has been serving us really well.
So if I understand correctly, there still is some sort of a collaboration, because you can achieve better conversion rates by having the merchant entrust you with some more data than the usual providers would get?
We can say that, yes, that is within of course, with the frameworks of what GDPR allows us to do and what data we can use. But of course, merchants are willing to share more with the knowledge that their brand is what stands.
Just a small follow-up question. Does your model work in cases where the merchant would, however, like to have several providers? Maybe it's their policy. Does the model still work?
We work only with exclusivity, so we provide a full checkout model. Every single payment method is owned by us.
Thank you. Let's move to Jakob. Banking as a service.
Yes.
What is your model? Why is it good?
I believe that this is the best way to do the business, but before I will reply, I think that traditional banks have expiry date right now. Traditional banks, unfortunately, they are not creating the innovation. They are mainly copy-paste to each other. They are checking what kind of features other banks have, and they are developing this by themselves. And I believe that future of finance is in embedded finance, that you could embed innovation from fintech directly to your application, portal, whatever. And I believe that the role of the bank will change significantly change in the nearest future, that banks should deliver regulatory framework, liquidity, risk, that part of the business, but not create the innovation. Yeah, and our merchants, our clients create the innovation, and we should support them. And I believe that banking as a service, embedded finance, this is the way how we should think about the finance and the innovation in the future. And from my point of view, we are a small bank who are working with European partner across all the European Union, and we are delivering them only that part which is connected with regulation, with this framework. And I don't want to focus on building a solution like a product. They are doing this, they know how to do this, they know the merchant, they know the clients. I'm not good in that area. If you're merchants, you will deliver them the best solution. I don't want to push them to my banking product, and I don't want to sell them product from the shelf. Many banks right now selling product from the shelf. No innovation, copy paste, and that's it. Banking as a service, I think this is the way how we should thinking about the finance right now.
So if I understand, in your model, the risk does sit with you, but the customer maybe does not?
I would say risk could be on my side. I'm happy to take this risk, but I don't want to help any customer relation. This part should be done by my partner, and I don't want to touch the client in the end. And from my business case perspective, this is, handling the customer relation is cost heavy. You need to keep those relations, and you need to have a lot of people. That is why I'm delivering only the backstage or back office part.
So I think we have two hypotheses here, right? One is that
Expiry date for the banks.
one is that we need to be splitting the value chain between the asset-heavy, capital-providing, funding, compliance, licensing on one hand, but customer experience and adaptability and quick change and maybe even customization on the other, right? Regardless of who the partner is, it is the fintech or the merchant themselves, correct?
Yeah.
Okay, so Elena, if I may follow up, it was interesting from two panelists before with a question, what do you prefer, a single provider of consumer credit or a marketplace of several? The first one might be easier to manage with, integrate, do deep customizations with. The second might increase your conversion. What are your views to the trade-off between these two things?
If I can choose, always I want to choose more providers and more partners, because in general we have, even at the beginning, is a nightmare. The negotiation, the integration, the contract, the standardization, reconciliation, all, it's a nightmare. In the last, for us, all is it a benefit because we have backup for financial solution. It's benefits because we have a good negotiation with all providers.
Price power.
It's benefits because we have an update in these financial services, because everybody wants to give us something new, something better if it's possible. And in the last, for us, for retailers, it's a benefit. Also, for our clients, it's important have some variant, and he choose what variant is okay for him.
Thank you. So
I think correct me if I'm wrong, but from Auchan perspective, this multi-acquiring, multi-supplier database is better. Yeah, you could use this competition, healthy competition, because in payments area, mainly we have Visa and MasterCard. Those two players, and right now I'm receiving a lot of questions how to kill Visa and MasterCard. Let's go to the account to account, because those guys are, they are everywhere. 60% of the SEPA transactions is made by settlements for Visa and MasterCard in the European Union. And I think this multi-acquiring, multi-channeling, I think this is the future, yeah? That if you have in one app, for example, in Auchan, if you have 12 providers, this is healthy competition. And in the end, client will have the additional value on this based on this competition.
Thank you. Andra, maybe just to go back to lending a little bit. So what role do you think consumer lending plays today and will play in the future in a traditional bank? How is it changing?
I think there is plenty of space on the market for all players that actually are doing the best they can in order to offer customers space and advisory to take a good decision, financial decision. Maybe also because of my background of 20 years in private banking, I do believe that education is also a very important part when you speak about each and every financial decision. Why? Because we are still in Romania, but I know for sure that there are plenty of other countries in Euros that still lack education, financial education. And we truly believe, at least in Raiffeisen, that having a more holistic approach to financial decisions, lending included, it's quite important. This is why we see lending from two perspectives. One, include lending and financial decisions regarding to lending into a more holistic approach of how to manage your budget as an individual or the family budget, because you do have a family in some of the cases. And there are quite big financial decisions that are also used accessing loans, be it consumer for small transactions, but also housing loans and so on and so forth. But there are a lot of other financial decisions that you should take for your healthy financial status, which is insurance, because insurance also became quite expensive. And here it's a platform also speaking about insurance. And yes, you should also consider lending embedded into an insurance solution, because house insurance, life insurance, health insurance, car insurance became quite expensive, and some of the retail customers do need advice and maybe also lending solutions with it. And as an universal bank, going more than integrating lending into overall financial planning and taking responsible decision also when it comes to lending, not just make it a transaction and a commodity, which it is actually nowadays. It is more about integrated into the overall understanding of the customer when it comes to the overall financial wallet, lending, investment, pension funds, insurances, and so on and so forth. So this is our approach. Second is embed lending, as I said, into broader financial solution, linking to insurance, linking to some other life decisions. But because we are a big universal banks, I'm also referring, because the panel is also about capital markets, not only banks and fintechs. And there are some other customers like higher net worth individuals, so wealthy customer, private banking customers that do need completely different other types of lending, and this is more of the cases related to Lombard lending, so pledging their investment portfolios and without selling the active investments that they have, but accessing a cash loan immediately based on the pledged invested portfolio, and then reinvest the cash into some other investment opportunities that they have, even if, like, imagine investing into an IPO on a stock exchange, so moving the money in the system. So I cannot see lending just, as a commodity, but put it into the whole overall chain.
So I very much agree. We at Limpe have always also looked to focus our lending on lifetime events. So we very much share the philosophy, but I would go one step further. Our thinking has become over the years pretty early that if you go to the end of the road of this thinking, the customer does not really need a loan as a product. They just need whatever they are buying, right? They just need the experience that they want. So does this mean that the loan should actually be, invisible? You just need to integrate well enough and even anticipate based on the data, maybe agentic commerce well enough to just provide them the right offer at the right moment, at the right place.
At the right moment in time, at the right moment, at the right point of sale when it comes to small loans. But when it comes to big loans like housing, there is a decision that is you do take for the 20 years time. Yeah,
Okay.
you have to live it with it. So you do need advice. So it very much depends on the lending amount and scope.
Okay, so to Vilma, because I think this builds on the same topic. In the Nordics, you're pretty big, if I understand correctly, over 20 billions of balance sheet across Europe in euros. You've built it up with consistent growth, but relatively low risk profile, I understand. Low risk profile in lending means that your approval rates cannot be extremely high, I guess. Or am I wrong? Do you use other things to achieve that?
I think overall the approval rate is always the key, and particularly when it comes to the let's say PMPL and the merchant financing, then it's like super crucial, especially when you are the only player providing the solution. But we have been always extremely strong in the underwriting. That has been our bread and butter. and that comes actually with the size and the experience, because if you become significant on the market, you possess a lot of data, and therefore that is I think the game. But when expanding and growing the book, for us the underwriting is always the most important thing. We have a centralized risk, and then we do the local adaptations. But I think that when you are a player like us, a deposit funded bank, then we don't have on one side the constraints of the funding, and on the opposite side we don't have the demand to fill the facility what a lot of fintechs are facing. So we can set the price and we can set the experience.
But
Very good.
Correct me. You mentioned about approval rate. What kind of approval rate you have? Can you share it? 20, 30?
The approval rate is very dependent on the product and on the market. We can talk about different ranges, close to 80-90% on some segments, some products, some regions, and then it can also be, I don't know, as low as 20%.
You know, why I ask? Because in Poland we have Allegro marketplace. Those guys have 98% approval rate, cost of risk below 0.4. This is classic banks, regular banks, even if they are super digital, they couldn't achieve this level. Yeah, and I think that this is the future of approval rate, that your clients know better than you, like a bank, your client and clients. Merchants, yeah, they know what is the risk. Yeah, and even if we introduce a agentic AI or whatever there, those guys know the business better.
So maybe to you, Jakob, you know, in the banking as a service, there were also some failures in Europe, right?
Yes.
Is this due to the execution or the model, or, you know, does it mean that more risk should be held in-house? Or
I would say this lesson learned from banking as a service business. Right now, this business is existing on the market from 2017, 2018. Like you mentioned, Solaris, they try to, you know, right now come back to the game. I worked previously in Ion and Vodino. We built this business from the scratch. And we did a lot of fuck-ups, yeah? We did probably 7-8 fuck-ups in this business, but we exited successfully to UniCredit on this. And I would say handling the risk, handling the relation with clients, this is difficult part, especially right now when here we have professionals mainly, people who understand the finance, but also our previous panelists mentioned about our kids and our young people here in the world, in Europe, and they don't care about the brands, they don't care about the names of banks. Right now we could recognize Raiffeisen, Auchan, etc. But my daughter is paying by phone, and when I asking her, do you know the name of the bank which are using? No, Apple. I'm paying Apple.
Okay. Just a very quick round for each one of you, because it's linked to what we were just discussing. What is your target growth rate for consumer lending? I'd be interested, you know, annual growth rate of volumes. I'd be interested to hear this, because there might be some differences for the three of you.
We have 45% annual growth rate.
Amazing.
Okay, no more challenges?
8.
Wilma wins for this one. Okay. Moving to Elena for, let's say, the last round of questions. So when you have several providers of these services at the checkout, right? How does this link to your discussions with bank and banking partners on the other side, on the corporate? So your working capital planning, your liquidity planning, your cash flows. Do you link these topics very much, or are they separate fully?
In general, are together, because all the activity in the last is a cash, and this cash have impact in our cash flow and in our liquidity. In general, the cash is king, and for us, for treasury, it's important to know how many cash we have daily, weekly, and in the next period. Also, it's important how many fees is necessary to pay. This is the reason that we decide have many providers, many banks in our portfolio. For example, we have now in our stores physically post sharing. and have 7 banks.
7.
7, yes. And with these 7 banks, we have now on us transaction 75%. It's a good optimization. Actually very good. But all in all time, it's important to find a new solution for fees optimization. At the same time, we have RoPay in our stores. And even RoPay is in the beginning period. This new modality of payments is very good also for clients, also for us. For clients because they pay in real time and receive the money if make on refund in real time, and also for us because we send the money in real time and receive the money in real time.
Once you define your strategy and it seems very clearly defined, right? Then there's the execution. So what are the challenges there, especially in terms of partnerships?
We all know traditional banks have their legacies, so they are not that simple companies that can move like a fintech. This is why I have said that in particular cases where it is very reasonable to partner with a fintech, and I actually did it in insurances for some specific use cases already. You do that, but it's quite complicated, and there are 4 complicated steps that I can also from my experience speak about. One is being the orchestrator and putting all the players at the same table. Yeah, this is complicated. Second, all the players to a project should have the same digital and technological readiness. Otherwise, you don't make it. Third, sometimes also regulation can be a blocker or a opportunity. I don't know how to say it, but can be part of the process. And in the end, very important is that all the participants to the project, irrespective if it's bank, fintech, merchant, other kind of partner, it's very important to have the same scope, not only making the profit, but also having the customer, like the ultimate beneficiary for the whole seamless process that you should develop in the end. So this is how I see from experience things happening.
Thank you. And for Avarda Bank, one of my questions when I was thinking about your model is if, since you really achieve very good cost of risk or low risk, very nice growth rate, very good conversions, right? But on the other hand, at least one merchant here, but we know many more, says they would like a marketplace. What is truly then your, unique sales proposition? How do you achieve this? What makes merchants decide not to ask for more providers?
I think first of all, our checkout offers all payment options. So everything depending on the market, what are the most used ways. So
all instant payment options plus lending.
Everything. So basically we provide bank links, we provide cards, we provide PayPal, whatever is common on that market. And on top of that, we also, of course, bolt on the credit solutions like invoices, pay free, or classical credit. So split pay over a longer period. So the merchant actually receives the full value from us. What we have as our USP is really that the merchant maintains their brand. And the brand itself is a value. I know that you say that it's not, but still, let's consider. I had earlier today a talk with one delegate here, and just let's take an example of Klarna, for example, which we tried to build the opposite. Let's say that you are Nike, and your brand is really strong, and with our solution, you as Nike, you own your brand. So throughout the customer journey, you only see one brand and one brand only, and that's Nike. Also, the after-purchase flow, in our case, the email for the payment comes from Nike. They remind you that this is the payment in true. We, of course, embed all the solution behind there. But after you have made the payment, you get the offer from Nike, let's say in the thank you page that, oh, by the way, there is minus 10% discount if you do the purchase now. In the Klarna model, you land in the Klarna app and you see Adidas there offering you minus 5% discount. So as a merchant, do you want that way, that Adidas get their offers there? Or would you prefer that you own your customer from the beginning till the end? So that is actually our value proposition for the merchants.
Thank you.
I believe in brands. I don't believe in brands in financial sector. This is the case. Yeah, that from that point of view, brands are like I mentioned. My daughter she's using Apple device. Yeah, and from the brand perspective, she's connecting payments with Apple phone. That's it. Yeah, and she's not connecting with the token inside the phone. Visa or MasterCard.
Jakub, let's try to finish with you, right? Banking as a service is not known so much yet in the audience. So what is your value proposition to your potential partners?
I believe that the biggest value is this regulatory framework, because this regulatory burden in the European Union is growing, and fintechs shouldn't focus on how to handle a relation with regulator. They need to focus on how to do the business. And that part which is connected with regulator, I will handle. I will handle AML, compliance, screening of the transactions. Please focus on your main core business. Don't build the systems, don't build the teams which will be responsible for which is not disconnected with your main target client's business. Yeah, and
would this make a fintech like us too much dependent on you?
Again, sorry, because
would we be too much dependent on you as a fintech if we did this?
Sorry, I didn't hear it.
Would we be too much dependent on you?
Too much dependent? I think no. I think that's also I believe that each fintech need to have multi partners, and I believe that if you have it, if you proper balance this, then you are on safe side. Yeah, that always I prefer also. We discuss during last night as well on this multi supplier, if you have a lot of providers, then in the end you have a better solution for the customer.
So thank you very much. If you allow me a few words, I think we have mainly supported the hypothesis that there is need for cooperation. There are a bit different types of cooperation, and there are different splits in the value chain, who does what, and I think these are extremely interesting models by all of you. And I think, we all have our homework to do to see what fits each and every one of us. But clearly the cooperation, not purely competition, is the solution. With this, I would thank you. It was a great pleasure to talk to you, and thank you to the audience and of course to the organizers.